So welcome everybody, and today what we're going to be going through are some questions on discontinued operations. Now I figured that this would be a good subject to cover some questions on just because it's fairly new, right? And a lot of students, they tend to struggle with it when it comes to, the midterm or just practicing problems in general. A lot of people just tend to struggle the discontinued operations section, and it's something that this course actually really emphasizes a lot. There's a lot of questions on it, and oftentimes, on the midterm exam, when you're forced to prepare or when you're asked to prepare an income statement, there's gonna be a discontinued operations section on it, okay? There's gonna be a portion of that tested, so I just think it's best to, help show you some questions, show you how to prepare for it, and what to look for when you have to prepare this section, okay? So let's just jump right into it. So I got two questions for you, and we'll just start with the first one right here. So, the Software Corporation decides to sell their clothing subsidiary, Style, on July 15th. A formal plan is in place, and the sale qualifies as discontinued operation. The subsidiary incurred a loss of $1.7 million net of tax between January 1st and July 15th, and a $500,000 net of tax loss between July 15th and December 31st. Okay, so let's just slow down for a moment. Okay, so first of all, we know that Software Corporation, they're selling a subsidiary, Style, and it tells us right in the question, it qualifies as discontinued operation. In every single discontinued operation question, it's going to tell you straight up that this is discontinued operation, okay? So we don't have to think about the criteria of what qualifies as discontinued operations and what doesn't. It's going to tell us right there, okay? So it's very simple and straightforward. Next, it's telling us that this discontinued operation incurred a loss of $1.7 million between January 1st and July 15th. Since they decided to sell it on July 15th, this loss of $1.7 million clearly occurred before it was deemed discontinued, okay? And then this $500,000 loss occurred between July 15th and December 31st. So it occurred after it was deemed discontinued. Okay? So that's what it's telling us so far. And then it's also just going to tell us that the expected loss from the sale of the assets is $50,200 net of tax as well. And Software Corporation follows IFRS. Okay? So a lot of important information there. And we'll decipher what is important and what is not in just a moment. But, when faced with these questions, I just want to let you know that there's really only three things you need to do. Okay? Because look, part A here, prepare the discontinued operation section for the income statement. Okay? A lot of people will look at this, and based on all the information here, they'll get scared. There's a lot of numbers, a lot of dates. How do you, go through it and organize it? It's actually not that hard. And what I'm going to need to ask you to know is just three things, okay? Three things you need to know. First thing here, right, is that discontinued operations, right, so ignore my crappy spelling, discontinued operations, right, always reports, the net income or net loss of the discontinued operation for the year in the discontinued operations section. Okay, so that's the first thing you need to know. First thing you're going to record in the discontinued operations section is the net income and net loss of the discontinued operation. Okay, second thing you need to know is discontinued operations. Discontinued operations always records the gain/loss from the sale of the asset. Okay? So that's the second thing you record. First thing discontinued operation records is net income / net loss of discontinued operation for the year. And the second thing is the gain or loss from the sale of the asset. And the third thing you need to know is that both of these things are reported net of tax. Okay? And those are the only three things you need to know in order to get through discontinued operations. Okay? As you can see in the question here, everything is reported net of tax. So for this particular question, we don't even have to worry about this third item here. Everything is already given to us net of tax, so we don't have to worry about it, okay? But we still need to prepare the discontinued operations section, okay? So first step here is just going to, obviously we're going to put our header, discontinued operations, right? Just going to put that there. And our first thing we're going to record, according to our, list here, is net income / net loss of discontinued operation for the year. So as you can see here, it tells us in the question that the subsidiary incurred a loss of $1.7 million before it was discontinued, and then it incurred a $500,000 loss after it was discontinued. Well, according to our, item here, it doesn't matter whether the loss was incurred before or after the, thing was discontinued. We just want it for the whole year. So as you can see, this question is dividing it for us, and it's dividing it in order to confuse you. It's throwing all these random dates, between January 1st and July 15th, and between July 15th, December 31st. All that is there to confuse you. We don't care that this $1.7 million happened between January 1st and July 15th. And we don't care that this $500,000 loss occurred between July 15th and December 31st. All we want to know is net income or net loss of the discontinued operation for the year. Okay? So our first item here is net loss for the year. Okay? And how we're going to solve that is just basically going to be $1.7 million loss plus by $500,000 loss. That's going to give it for the whole year. So in order to solve for that, it's just 1.7 million plus by $500,000. Right? If we do that, first item we're going to put for net loss for the year, it's going to add up to $2,200,000. Pretty simple. Okay? So that's the first item, and then we're already halfway done the section. Only one more thing to record, and that is the gain / loss from the sale of the asset. And we can clearly see right here the expected loss from the sale of the asset is $50,200 net of tax. So, expected loss from sale of assets, and this is just $50,200. Okay, so straightforward and easy enough. And what are we going to do to finish off the statement? We're just going to add it up. Total loss from discontinued operations. Okay, so if we add these two things up, we are going to get a total loss of $2,250,200. Okay, and that is basically how you prepare the statement. As you can see, it's super easy. You just need to know three things, and so you just put them in your statement here, and there you go. Also, one more thing I did forget to mention. You know how both of these things are reported net of tax? Well, you actually have to include in this section, you just have to write in net of tax right there, just to let them know that that's what it's reported as. Okay? So we just add that in, and that's how you do the statement. Okay? First, all you do is you take your net loss for the year, right? Then you just do your expected loss from the sale of the asset, report both at net of tax, figure out your total loss by adding them up, and then there you go. That's how you do part A. And then part B here is a bit of theory. It's asking you, how would discontinued operations be reported on the balance sheet for this scenario? Okay? And this is where the whole IFRS and ASPE are going to come into play. Okay? Now, discontinued operation right here, this whole thing right here, how you prepare the section, it's actually prepared the same under IFRS and ASPE, but the way that it's going to be shown on the balance sheet is different. Okay? So, let's write part B here for you. On the balance sheet, right, IFRS, what we're going to do is the assets of the discontinued operation are reported under current assets. Okay? And the liabilities of discontinued operation, ignore that spelling, are going to be reported as current liabilities. Okay? So this is just your typical theory question that sometimes they'll sneak in on the midterm, right? Little 1 or 2 marker, just asking you to explain in words how it would be on the balance sheet. They're never going to ask you to actually prepare a balance sheet here, because of course we're focusing on income statements, but sometimes they'll ask you to describe how it would look like on the balance sheet in words. So under IFRS, for, discontinued operations, the assets of the discontinued operation are reporting current assets, and the liabilities here of the discontinued operation are reported under current liabilities. That's easy to remember. Now, if this were ASPE, it'd be a bit different, okay? ASPE, the assets and liabilities are reported under a separate section titled non-current assets or non-current liabilities. Non-current assets or, non-current liabilities held for sale. Okay? Sorry, I spelled that wrong. Non-total asset, non-current. Come on, get that right. Come on, stop giving me shit word. Okay, so under ASPE, the assets would be reported as non-current assets held for sale, and the liabilities were reported under their own separate section titled non-current liabilities held for sale. Okay, so that's something that you're going to have to memorize there, just a little bit of theory, but I just want to, provide that for you because, they do ask it, and I want you to be prepared for everything. But the main thing I want you to get from this is how to prepare this discontinued operation section. And all you need to know to prepare that are these 3 things. Okay? And with that, we're just going to move on to the second discontinued operation question. Okay? So here is the second question here. We'll just jump right into it again. Software Corporation decides to dispose of their marketing division. The division incurs roughly 60% of the total company's income. However, there is now a formal plan in motion and it meets the criteria of discontinued operation. Again, right there in the question, it tells you it's a discontinued operation for the marketing division. Okay? Always tells you right away. Net income for the Software Corporation amounted to $67,000, and the after-tax loss from operations of the marketing division was $13,200. Okay? Again, these are all after tax, meaning it's net of tax. Okay? So this is good. The asset of the marketing division planned to be sold for $7,500. Their carrying value is $30,000, and the estimated fair value of the asset is $13,000. Software Corporation follows ASPE, and the tax rate is 15%. So as you can see, this one is way more complicated. There's a lot more numbers and things being thrown at us, okay? So easiest way, again, to start this question, because here, again, it's asking, prepare the partial income statement starting from income from continued operations before tax, okay? So basically, prepare the discontinued operations section, all right? Now, like I said, this one is a lot harder, okay? Not only is it asking us to complete the discontinued operations section, but it's asking us to, record net income and to start from income from continued operations. So it's a bit longer here, and from the numbers here, it looks a little bit more complicated, okay? And to be honest, it is, but it's nothing to worry about, okay? Again, the best way to start is to just add in our 3 things that we need to know, okay? So here are the 3 things. First one, as always, is, record net income / net loss of the discontinued operation for the year in the discontinued operation section. Okay? Second thing is report the gain or loss from sale of asset. And third thing is make sure that both of these are reported net of tax. Okay? So we're supposed to start with our income from continued operations. Okay? So we'll just add that right in there. Okay? But unfortunately, it doesn't give that to us. Okay? So we're going to solve for that later. Okay? So, and actually, sorry, it's asking us to start with our income from continued operations before tax. And we don't even know that. Okay? So usually after this right here is where you would, record your income tax. And then after that is where your income from continued operations would be. This is where having knowledge of the layout of the income statement comes into play. Okay, so this is generally how the layout of the statement is. But of course, we don't know this. And we don't know income tax as well. And we also don't know, of course, our income from continued operations. But then what happens after that? This is where our discontinued operation section would be, okay? And based on all this information up here, we can actually calculate that, okay? So the first thing is net income / net loss for the year. And make sure that that's reported net of tax, okay? So what do we have up here? It says net income for Solware Corporation amounted to $67,000, okay? And then the after-tax loss from operations of the marketing division was $13,200. Okay, so there we go, right in the question. After-tax loss was $13,200. So it tells us exactly what it is. So we have our net loss from operations of, $13,200. Very straightforward. And then the next thing here is, and of course this has to be net of tax, right? Can't forget that third one I almost did right there. Has to be reported net of tax. And it tells us right there that it's after tax loss, so we know it's net of tax. And then the second thing here we need to know is that we have to record the gain or loss from the sale of the asset. Okay, so what do we have here? The asset of the marketing division planned to be sold for $7,500. Then the carrying value is $30,000, and the estimated fair value of the asset is $13,000. Okay, so as you can see, unlike the first question, it's not straight up telling us what the expected loss or gain is. It's given us, what it expects to be sold for, its carrying value, and its fair value. Okay, now this is where some math is going to come into play. Okay, we're actually going to need to calculate manually what it is. Okay, so in order to calculate a gain or loss, right, you're going to need to know this calculation, so I would take note of it. Gain / loss equals, expected selling price subtracted by our carrying value. Okay? This is what gain / loss equals. Okay? So, let's check back. Do we have any of these? Yes, we do. The asset is planned to be sold for $7,500. So, our expected selling price equals $7,500. And it also tells us that our carrying value is $30,000. Notice how this calculation does not include estimated fair value. Nowhere do you see that. In fact, there is no need for this to be here. We do not need estimated fair value asset, so simply ignore that. But we do need this carrying value of $30,000. Okay, so we just put it in, $30,000. This is going to give us a loss of $22,500. Okay, so we can put that right in the section here. Loss from sale of asset of $22,500. Okay? Now, one thing before we move on really quickly is that this carrying value here, sometimes the question won't give it to you, and you'll need to calculate that yourself. And carrying value actually equals cost of the asset minus its accumulated depreciation. Okay? So just take note of that formula. Luckily, we didn't have to use it here today, but you may in future questions need to use that. All right? Now, one thing I want to point out that, this amount here, right, these amounts here, it doesn't say that they're net of tax or after tax. Okay, so we're going to assume them to be pre-tax figures. But notice, remember that third thing, that both of these items here, right, both of these items need to be reported net of tax. Okay, this $22,500 isn't net of tax, it is pre-tax. So we're going to need to report it net of tax somehow. Okay, how are we going to do that? We're going to simply times that by the tax rate. So we actually don't know what this number is yet. Still a question mark to us. So we're going to take our, so this right here, we're saying it's pre-tax, okay? And we need to figure out what it is net of tax. So to figure out what it is net of tax, it's actually going to be $22,500 times by 1 subtracted by the tax rate. In this case, the tax rate is 15%, okay? So it's 1 minus the tax rate of 15% here. If we follow that, then we'll figure out that our loss from the sale of the asset net of tax is actually $19,125. Okay? So a little bit tricky there. You need to pay attention to the wording in these questions. You need to figure out if these amounts are after tax or if they're pre-tax. Okay? Because if they're pre-tax like it was here, like it was right here, then we must times it by 1 minus the tax rate, which is given to us right there. Okay? So we've reported our two things. Now we just need to simply total it up. Total loss from discontinued operations. Here, let me just change the formatting of this so it looks a little bit cleaner. Total loss from discontinued operations is going to be, $13,200 plus $19,125. So we add these up. Let's just see what it is. It's going to be $32,325. Okay? So this is our total loss. Just put it in our little brackets there. It doesn't matter if you put them in or not. I just like to. And remember, the question isn't just asking us to complete the discontinued operation section, but it's actually asking us to finish the income statement. So, of course, to finish off the income statement, we need to add in net income. Now, I'm just going to make a little bit more space here and delete these three things we need to know because we've already prepared our part here. And I'm also going to delete their gain calculation because we no longer need that. But what we do need is our net income, okay? And if you're paying attention to the givens, it actually tells us our net income is $67,000. Told us in the question, thankfully, okay? And knowing our net income and now knowing what our total loss from discontinued operations is, we're actually going to be able to go back and figure out what these three amounts are, okay? So the first thing that we can figure out is actually our income from continued operations, because our income from continued operations subtracted by our total loss from discontinued operations has to equal net income. Therefore, this amount right here has to equal $67,000 plus by $32,325. Okay, don't believe me? Just look at this, okay? If we actually do this calculation here, we'll figure out that income from continued operations should equal $99,325. If we do this correctly, right? Look, $99,325 subtracted by our total loss here of $32,325 gives us our net income of $67,000. Okay? So as you can see, this works. This flows. Okay? And now that we know our income from continued operations, we can solve for income tax and income from continued operation before tax. So first one here we're going to calculate is our income from continued operations before tax, because it's fairly simple. It's basically just our income from continued operations and then, add in the tax to it. How are we going to do that? We're simply just going to take our income from continued operations, and in order to add the tax, we're just going to divide it by 1 minus the tax rate. Okay? Let me just change the format in here. Okay. Okay, and that's actually how you're going to add the tax back to it. Okay, and if you do that, if you follow that equation appropriately, okay, obviously if you're going to, do BEDMAS properly, these should be in brackets here. So you're basically taking your income from continued operations of $99,325 and dividing it by 0.85, okay, 1 minus the tax rate. And that will have the effect of adding the tax back to income from continued operations, giving us income from continued operations before tax of $116,852. And now, finding our income tax is simply just fill in the blanks, okay? It's simply just going to be our $116,852 times by our tax rate, okay? So that one we can actually solve properly, and we'll figure out that our income tax of the year was just $17,527. Okay? And that's how you do it. Okay? That's how you prepare the partial income statement for the year, starting from income from continued operations before tax. Now, this question was a little bit more confusing than the first one. But as long as you know those three things, preparing the discontinued operations section was easy. It was easy for both questions, I hope, for both of you guys. It gave us net income, right? So the only tricky part was just actually working our way back and solving for these, okay? And this is actually, a typical question that they'll ask you on the exam. A lot of the times they'll get you to start from income from continued operations before tax. So it's important that you know how to take givens, how to take net income and the discontinued operations section and work your way back, right? Now, I hope this has helped you out, and I hope it will help, solve your discontinued operation questions on the midterm and in your practice questions.